With insurance costs on the rise, more companies are promoting a specific type of policy to keep premiums down, but they can come with a big surprise. One Hazel Crest woman found out the hard way when she overlooked the fine print in the policy.
We're going to take a close look at that. NBC5 Responds revealing some of the crucial details every homeowner really needs to check before buying a homeowner's policy.
At first, it felt like a dream.
Once I actually stepped foot in here, I was in love.
But just a few months into owning her first home, Nakia woke up in a nightmare.
I came downstairs and I saw the water pouring from the ceiling.
The burst pipe turned into paperwork. Nakia had an insurance policy through Liberty Mutual, but as soon as she filed her claim,
That's where they told me I had the $14,000 deductible.
it was right there in her policy. The deductible is 2% of her total dwelling coverage, but it was news to Nakia.
It's not particularly new, but it's something that's been happening increasingly.
Bob Passmore of the American Property Casualty Insurance Association explains more insurance companies are offering percentage-based deductibles, calculated from the cost to rebuild your home.
These deductibles allow homeowners to take on a little bit larger share of the risk in exchange for a lower premium.
Passmore says these percentage-based deductibles have grown more popular as insurance costs increase. According to industry insiders, insurers operating at a loss in recent years use them to keep premiums more manageable for customers.
And I was just like, okay, they can't be right.
Nakia admits as a first-time homeowner, she had no idea what she had signed up for.
When I was getting my policy, it was just like, okay, you want the least expensive.
Faced with a $14,000 deductible, she decided to pay out of pocket for her repairs and cancel her claim.
The cost of the repairs were like $6,000 to $7,000.
And after that, she updated her homeowner's policy.
And I changed my policy to reflect a $1,000 deductible, which it wasn't a big difference in the pricing. So it was just like maybe about $30 or $40 more per month, and we could have led with that.
We reached out to Liberty Mutual. They told us they were reaching out to Nakia directly to address her concerns. Now, here are some key takeaways. Read your homeowner's insurance policy. It may be long and dense, but you should at least know what you might be on the hook to pay if you ever need to file a claim. Next, pay attention to any renewal notices you get through the mail or email. Again, you don't want to be surprised with unexpected costs or changes you didn't know were coming. Lastly, make sure your insurance company has the most updated information so that the replacement cost of your home is accurately assessed. PJ Randhawa, NBC5 Responds.